Right, welcome to the last video that I will make until the masterclass for tomorrow. Guys, we have less than 24 hours left to sign up to the free masterclass that I'm going to be holding tomorrow, breaking down this exact system that I've been using on this YouTube channel for making daily videos for the last 300 days and getting 80% win rate out of it. It's not going to be some BS webinar where all you're going to get is the story of how I grew up and my childhood story. It's genuinely going to be valuable, and yeah, really looking forward. Currently, we already have 200 slides ready to go and super excited to bring this to you tomorrow. If you haven't signed up yet, it's completely for free. Click the first link down below. But otherwise, let's get into the video for today. Now, kicking us off on the daily chart, we had a bullish daily bias, but just so you know, today is like Black Friday and it's already Thanksgiving holiday. Most of the major financial institutions have already taken the day off. Heck, it's a long weekend. So chances are volatility is going to be very low. It's the same situation as yesterday where we had a lot of, we had a clear setup, but ultimately it just didn't play out. Or at the very least, it didn't play out in the time that it was supposed to. And so yesterday ended up being a no trade. And ultimately, if you take a look at the chart, this is really low volatility environments to be trading in. And the reason why this is the case is because, well, there is no news. There is no reason for price to have volatility. And so just understand that today could be a very similar story where I could give you the perfect setup and everything may be playing out, but you just don't get enough volatility for price to either hit the TP or just enough movement for anything to be meaningful. And so if there is a suggestion that I could give for you, it's just take the day off. It's Friday. You have a big, fat, juicy masterclass coming to you tomorrow. I would rather you make sure you stay fresh for all of the knowledge bombs that are going to drop tomorrow. But otherwise, just to give you the trade anyways, let's take a look at the 1 hourly time frame. We're going to look for essentially PD arrays that support our daily bias because it is going to be bullish. First of all, right now, price has closed above this level. So this is now a valid bullish order block. The only thing that I would be careful of is the fact that you have relatively equal lows here, which means there's a very high likelihood that these lows are going to get swept before any sort of upside movement. Now, on the flip side of the equation, you can also see that there are relatively equal highs. And this is just very much a consolidation pattern. So you're starting to see now where today is not the best trading day, but still there are two things that you can do to take advantage of, well, in the event that some sort of big move happens. Well, there's only going to be, two things that's really going to happen. One is by the time that you watch this video, price is going to start making higher highs and higher lows. And at that point, you can just use this as your support. And you can trade things higher. And when I say by the time you watch this, what I really mean is anywhere between 7 a.m. to 10 a.m. New York. That is New York kill zone. And even though we don't have news today, that means we just trade the New York kill zone. And if that happens, this is still going to be valid because it will be in line with the daily bias. It will be in line with the hourly bias. And chances are it's going to be in line with the 5-minute time frame as well. Taking a look at the other setup first before we get into the 5-minute time frame is this one right here. That is an order block. In the event that you sweep out these lows, chances are you're going to fill in this order block, but chances are also that you're not going to get a pump immediately because once this happens, this entire block here is basically going to become bearish resistance, at least on a 1 hourly chart. So it's highly unlikely that you're just going to fill this and go for a V-shaped recovery and immediately pump above $92,000. Just be aware of that. Like, ideally, we want price to not break underneath these couple of levels too much. And when I say this level, I mean 90,600 as well as 90,400. You can get a sweep underneath these levels just to clear out some liquidity underneath this level, but you don't want to see price close below it on the 1 hourly time frame. Otherwise, this is going to just completely invalidate this trade idea. But now that that's over with, let's get into the 5-minute time frame. And the 5-minute time frame so far, based on what we can see, is that we have a breakout during the Asia session, a retracement of the London session back into the Asia range, and then so far London is breaking out again. So it's starting to look like today could be a accumulation breakout continuation type of setup, which is known as ABC. Is that 100% likely to happen? I don't know. Again, it's like everything could line up, but the fact that we have no news and it's Friday and it's Thanksgiving weekend makes me believe that the probability for today is going to be lower. So again, if you can just take today off, it would be absolutely amazing. But if you want to take a trade, and the setup is just going to be waiting for a retrace or a breakout. So the first retracement area is going to be this Beverly gap here. This aligns with this overall order block here. And you're just going to wait for price to retrace into here, break above the highs, and just continue momentum trading the price today higher. On the flip side of the equation, again, if you start closing below these levels, just understand that this trade is very likely going to get invalidated. So it's not to say that there's a loss. It's more to say that we just didn't have the enough confirmations to enter into a trade. So it becomes a no trade, right? We only want to enter trades where we get all of the confirmations, especially on a day where you don't have any news. You've got to make sure that everything's aligned. You're already dealing with lower probability conditions. If you also, like, the way that you execute the trade is based on low probability like confirmations, guess what? You're having low probability and low probability together, multiplied, they end up in lost money. Probably the coconut and the sun for today. So yeah, that is the overall setup for Bitcoin. But just understand, what type of situation and what type of environment that you are trading in. Next up, we move into Ethereum. Ethereum had a pretty nice pump recently, but let's try to break that down. Just today, you actually had a bearish candle close. So technically for Ethereum today, you should be looking for shorts, especially now that you are coming into this higher time frame, just order block. Now, whether or not that is likely, maybe. Now, right now, you have just swept a previous high. So if you start, just breaking down from here, it could be a very valid short. However, in terms of Bitcoin, you are looking at longs for Bitcoin. So in the event that Bitcoin pumps, there's pretty high likelihood that Ethereum is going to pump as well. So my suggestion is that you try to avoid Ethereum today, unless you are 100% going for a long. Then this is going to be kind of an order block that you can take advantage of going down into the 1 hourly time frame. That is going to be the order block starting at 30.40, going all the way down to $3,000. Now you can also have another level here at 30.20. So in the event that you retrace into either one of these levels, going in line with 7 a.m. to 10 a.m., in line with the daily buys, not for Ethereum though, but the daily buys for Bitcoin, just because of how correlated they are. It's risky to just take opposite directions because ultimately they are the same chart. They just move at slightly different magnitudes and slightly different timings, but for the most part, it is the same chart. It's like if you see a long settlement on Ethereum, all of the other altcoins, but Bitcoin ends up taking a dump, well, all of the altcoins are going to go down as well. So not really too much point. It's Bitcoin, especially when you're dealing with the large cap altcoins. Next up, we move into Solana. Solana, you also close bearish, but so far you have relatively equal highs. This also leads me to believe that price is just going to shoot for those relatively equal highs, just to take out the liquidity and stop everyone out. And the setup for Solana is going to be pretty straightforward. You have just retraced into this higher time frame fair value gap right here, and so far you are pumping from there. Now, the only thing that you're going to want to look for is a retracement into here. Well, technically you already got it, which is a retracement into this CISD. But by the time you watch this video, if you're too late or if price comes back to $140, that's going to be a great entry to get in on Solana, basically taking advantage of the order block and pumping from that point onwards. Now, if Solana, by the time you watch this video, is already above $143, you can also look for this to become the next kind of level of support that you can take advantage of. But otherwise, just a quick video today because I honestly have to go and prep for the masterclass. It's going to be a great one. Make sure you sign up if you haven't already. Happy Thanksgiving, and I'll see you guys tomorrow. Looking forward to it. Ciao, ciao.